Hello, everyone, and welcome to the IAN Knowledge Series. I'm Kanchi Daiya from the Indian Angel Network, and today we're going to talk about building differentiated businesses. Think barriers to entry, competitive advantages, moats. There are many different terms used. So call it what you may, this is a crucial topic to think about and act on, whether you're a startup or a large corporation, irrespective. So, to take us through an insightful session, here we have with us Mr. Anupam Saronwala. Mr. Anupam focuses on helping companies grow by applying technology innovations that eventually drive tangible business value. He leverages over 35 years of global experience that he has had with Indian and American companies in the areas of business consulting, technology, licensing and alliances, fundraising, software research and development, and operations. With his last stint of over 14 years with the world's premier industrial research lab, IBM Research. He's an active member of the Indian Angel Network, through which he works very closely with startups and mentors them as they grow their venture. So thank you, Mr. Anupam, for joining us today. Mr. Anupam, you're on mute.
Yeah.
Okay.
Okay, thank you, Kanchi, and welcome all of you. So as Kanchi said, today we are going to talk about building differentiated businesses. So what I plan to do is, I think we have a little over an hour. What I plan to do is maybe talk about 35, 40 minutes and then open it up for Q&A. But in between also, if you have any questions, feel free to put it on the Q&A box or the chat box. And Kanchi will help me in kind of monitoring that, and we should try to make it as interactive as we can. So my first, I think, thing is that how will a startup or a venture be successful? Now, yes, you can take some ideas, you can look at what others are doing, but really what is required is that you create some kind of a differentiation in your product or service. And we will talk about what those different types could be. But first of all, in my experience, both working at IBM Research and helping startups, what is most important to build a unique product or service or whatever you are creating is that you need to have a strategic focus, that it is not going to be just what somebody has, I'm going to replicate. So strategy is important. Second one is mindset. I think the mindset of creating something new. So most of you, I believe, on this session are entrepreneurs, and entrepreneurs typically strive to do things in a better manner, which makes life of their customers better. And in addition to strategy and mindset, what you need to obviously do is execution. Because if you cannot execute on your strategy, then strategy has no meaning. So I'll say that three things you need to keep it in mind. And one more thing I always tell startups is that if you are solving a customer problem, you are trying to come up with a better solution. Always look at it this way, that the world was still working before your solution came into the market or before you introduced it. So you need to understand the customer extremely well to be able to define a good product or service. And we will keep on coming back to that again and again. And another one, when I talked about mindset, you must be able to think out of box. And because if it is conventional way of thinking, chances are you will not be able to create a differentiated business. And the topic today is that how do you create a moat? So, and we will talk about what a moat is. And I think in the past few sessions, you have already heard about business model when Alok Mittal talked about it, high performing teams. So some of things what you have already learned who attended those sessions, they are all various ways of creating differentiated businesses. So I will always encourage you folks to have the right mindset to create something different and new. Now coming to the main topic of the session is what is a moat? Now, obviously, if you look at the English meaning in dictionary, it is, there were all these fortified places like castle. And so it is a deep, wide trench which encircles a castle. And that is typically filled with water. And I think the main purpose of that moat is that when enemy forces or enemy attacks a particular castle, they have to cross through that river, which is called the moat. So truly, moat is a word coming from dictionary, which helps you create some kind of a barrier to your competitors. And that is where I believe when I was going through who came up with this applying the word moat to businesses, it was actually Warren Buffett who popularized it. And it is basically, he called the business moat or economic moat, which is a business's ability to maintain competitive advantages. I think that's a very important word, competitive advantages over its competitors in order to protect its long-term profits and market share from competing firms. So it is basically competition is where you want to beat the hell out of them, and you want to maintain your profits and your market share. So it means you have to create a moat on an ongoing basis. So, for instance, I was with IBM for 15 years, more than 14 years. We always used to come up with new technologies which helped create that differentiation. And I will talk about a lot of different type of modes. And in startup ecosystem, a lot of times you will hear the word, okay, if you're talking to investors, what is your entry barrier? Now, entry barrier is basically your moat so that nobody else can come and replicate what you have very easily. Now, easily could be, with whatever resources they have, or easily meaning, can they do it within 6 months? Okay, so that is where it is important for you to always continue thinking of what moat I'm creating for my business. And that's a very, very important question which every investor, potential investor will ask you. Because if whatever you have created can be replicated in a reasonable period of time or in small use of resources, then you will not have that unique advantage. So coming to what are the different type of moats, and you don't have to take notes because in the end I am going to put up a slide so that you can take a screenshot or whatever. But different type of modes, and the biggest one, at least I have seen, and maybe I'm biased because of my technology background, and most of the investments I have made are where there is a technology based moat, okay, or technology based entry barrier. And the biggest one for technology is patents. Now, a lot of times people, okay, an advantage of patents is that you know that nobody else has it because patents very rigorous, and patents also help you to defend your own creation. No doubt they get expensive, especially when you are filing in USPTO. But by the way, I have 5 patents filed myself when I was working with IBM. And most of the companies you will see, whether it is Google, it is Microsoft, IBM files about, I think, last when I was there 3 years ago, it was like 40,000. Okay, they filed about, I think, 8,000 patents in 1 year. And overall, IBM has a portfolio of 150,000 patents. Pharma companies is another one, who when they discover new drugs, they file patents, patents. Then if somebody wants to use your patent, then they have to license it and pay you licensing fee, and so it kind of ascertains that you have differentiation, nobody else has it, so competition, but typically will not be able to catch up because you have kind of blocked out the competition. Similarly, trademarks. Now, trademarks is not as strong as patents, but it also helps, and I think all of you know the classic example of Apple as a trademark. And otherwise, Apple is the fruit. But the way Apple has trademarked their name with that bitten apple, I think that's the most popular thing. Today, you won't see Apple as a word on any of their products. You will just see the trademark which they have. So that's another way to create entry barrier. Data is another huge one. So most of the kind of things you see where I think classical example on data when I think of it is related to Google. So Google started off as a search engine, and they offered it free. They kept on collecting data, and they have collected so much data now that nobody can really compete with them. Recently, now they are basically facing an antitrust suit in the US because of the kind of monopoly they have created. Now, whether they will be able to get away with that or not, we don't know. But data can be a huge entry barrier which provides you a moat. And another example is platform. Now, there is, by the way, some commonality between platform and data. But platform is where you start with one particular offering or a service, and then you expand on that platform so that the same users come back to your platform. Like classic example is Facebook and Instagram. So Facebook started off as Facebook. Then over time, they created a platform, they created an entry barrier to a large extent, and then they bought over Instagram, and that just gave them such a tremendous lead that a platform play typically, like another example comes to my mind is Paytm, right? So Paytm initially started off just as a recharge kind of offering, but over time they added more and more users, they added more and more vendors or merchants, and now they are into then they started selling gold, then they started selling mutual funds. So it is all a platform play where you keep on adding more functionality, where you keep on getting more users, and over a period of time, you create that entry barrier. And so these are all technology related barriers or moats, which whenever you are thinking of your business, that's the way to do it. A second type is size or scale. Now that takes time to build it. But again, I'll say classical example is Amazon. Okay, so what Amazon has done is it is again a network effect. They started with books, then they added more products, then they kind of got more into e-commerce, and as you build more and put more and more products and brands on your platform, you get more and more users, and it basically has a network compounding impact. And then from there, and then pretty much Flipkart followed the same model, where Amazon was primarily focusing on US. They were not looking at Indian market. I think Flipkart just took their model, implemented it so well, the Mansell brothers, and they just kept on innovating around it and keep on building it. Till obviously Amazon came to India, then they started competing with them. And end of the day, there are only basically two large e-commerce things out there. And Big Basket is obviously doing it for groceries and other day-to-day items. Another example of scale and size is network of partners. So one which comes to my mind is Uber or Ola. They followed more or less similar trajectory. Uber was not in India. Ola started off. Ola got so many drivers, okay, or chauffeurs-driven cars, that itself created a network effect. And more the number of drivers, more the number of passengers. And that's one way which how Ola grew. That's one way of the similar way how Uber grew in India or Uber grew worldwide. Okay, Airbnb is another example which that you have network of partners, which helps you do build size and scale. Another one is global markets. Now, a lot of times people, startups or companies primarily focus on one geography, and that is not a good enough way to create a moat. So, and you don't want to be dependent on only one market for all your products, because market dynamics do change. So, global markets is another kind of mindset which helps you create a very strong moat. Then we come to some other which are related to cost. Okay. Now, cost, the classical example of creating a mode of cost is that you create such an entry barrier that for your consumer or your customers, there is a heavy price to pay if they switch out from you, and because that's basically switching cost. Now, one example which comes to my mind is, and this happens with me personally. Like I started using Paytm, and now my all kind of bills are with Paytm. They know when my bill is due. They send me a reminder. Okay, and so it just makes it so much easier. Even though people tell me that Google Pay is very good, Amazon Pay is good, Phone Pay is there. Okay, all those. But to me, okay, the switching cost trying to go to a competitor, okay, is kind of significant, and I will not change it if I can avoid it. But yes, if tomorrow Paytm does not add more features, continue adding more entry barriers, okay, like they started now mutual funds. So right now I do mutual funds through advisors from a bank. I'm an advisor in a bank, but uh, uh, but if Paytm starts on mutual funds, maybe I will go into that. But I have not really looked at any other mutual fund platform. Like I know there's Fisdom, there is, I think even Paisa Bazaar has mutual funds, but it is just the switching cost itself which creates an entry barrier. Another example of cost is sunk cost, and one example which comes to my mind, it is a non-technology play, but I think all of us use this particular product, at least all men use this product every morning. It is a Gillette. Now, what is Gillette's strategy of creating an entry barrier? They sell you a razor at a very, very cheap price, and they will put maybe five Mac 3 blades in there as a package offering to the razor. And once you have bought the razor, chances are, okay, and the razor is not that big a sunk cost, by the way, but I'll give you another example of a much larger sunk cost. But then you will continue buying those blades. Okay. Another example is, let's say, IT industry, HP printers. Printers are very cheap, but consumables are pretty expensive. And if even if I've bought a printer for, let's say, 10,000 rupees, if it is a inkjet, or I bought a laser for 25,000 rupees, okay, will I change my printer just because HP is playing around with the cost of cartridges? Chances are not. So if you can create that kind of a business model, okay, where the customer is going to kind of perceive you as that you have created a barrier by looking at the sunk cost. And another one is, low cost due to scaling. Now, this is a very tricky one because you can do penetrative pricing. Basically, you offer a very low price to create an entry barrier or create a moat. And obviously, the classic example is Reliance Jio when they came up with their mobile offering against Airtel and Vodafone at that time. Now Vodafone has changed its name. So, and Reliance could do that because they had so much funding. Even now, when Reliance Jio is getting so much funding from Google and Qualcomm and Intel, okay, they will, it's not only they will create a huge moat by offering services which are much lower cost and hopefully much more efficient compared to what competitors can do. And that will itself create a moat. So anything which is related to cost or your financial model is a very, very kind of important strategic weapon to create a moat. And in addition to technology, I talked about size and scale. I talked about cost. There are some soft moats also, okay? And soft moats are typically related to brand, okay? Now, two examples come to my mind when it is brand. Apple, I think everybody knows it. I started using an iPhone, okay? I used to be using IBM ThinkPad while I was at IBM. But over time, I found that iPhone works very well for me. And I also basically then said, okay, I'll go for Apple brand. So I started using a Mac. Okay, now I will go ahead with Apple Watch. So it is a brand which you trust, and you then continue buying that again and again. And similarly, I'll say a non-technology example is Starbucks. So if you have to have a coffee, there are enough options there, right? Coffee and bean, there is coffee, cafe coffee day, there are. But people who love Starbucks, they will only go Starbucks. I think that itself is a moat which Starbucks has created because they have created a brand which they live up to. Or but let's take example McDonald's or Burger King or whatever. So a brand itself is a huge, huge entry barrier. Now some of these entry barriers do take time, but but that's what moat is really about. And by the way, we will talk about how to create a moat and how to maintain that in this session only. But another soft moat example is culture. I'm a strong believer of a corporate culture and the kind of culture you create. And one thing which comes to my mind always when I think of culture is Infosys. I think there are a lot of other software service providers which came, but people used to take pride when they are working for Infosys for their culture of integrity, for their culture of treating their employees well, for their culture of giving financial compensation in terms of stock options, and they created a culture in Indian corporate system that a lot of other companies are following. And I know that in early 90s when they created this, at that time I was in US, I know in US companies used to do that. And I was with different companies, not with IBM. There was that culture of integrity, personal responsibility, fair compensation, diversity. And IBM is a true believer in that. I know Google does that and a lot of other companies. But in India, Infosys created that brand name and created a mode. So employees used to love to go and work at Infosys. I still remember, okay, Narana Murthy, I think, made a statement once. And somebody, I think in one of the investor calls, somebody asked me, what is your biggest asset? He said, my biggest asset are my people, and I can't control them because my biggest assets walk out of my the campus every evening, and I'm not too sure whether they are going to come back tomorrow morning and work in a motivated manner. Now, to me, that's the strength of that culture, that he respected those individuals and they used to love working with Infosys. And last but not the least, another soft mode is regulatory. So I think classic example is mobile service providers. Initially, Government of India allowed so many licenses. End of the day today, we have practically four, maybe if I really count, okay, mobile service providers because they persisted, they got regulatory licenses upfront, and once they had those regulatory licenses, they kept on kind of building on it. And even though when mobile services had started in the late 90s, at that time in every circle there used to be at least 8 to 10 service providers. Okay, but over time all of them had to go away and the whole industry got consolidated. But the ones who survived have created such a huge moat that for anybody to think today to enter mobile services is going to be extremely difficult. So sometimes regulation itself helps you to create that moat if you take advantage of that at the right time. So in order to summarize, I'll say there are four at a high level, which is technology, size and or scale, cost, and soft modes. So what I'm going to do now is take a little bit of a break here. I'm going to request Anup to show the slide summarizing these modes, and then also request Kanchi to, and so basically you will be able to reflect back that what kind of a mode you think you have created for your business or you plan to create for your business, or you still need to go back and think what is the mode you're really creating, because that you have to revisit your strategy. Okay, if strategy is not there, mode is not there, I'll say go look at your mindset, because if you don't have a mindset to create mode, I will be very blunt with you, it's going to be very difficult for you to build a strong startup which will sustain. And so I see the chart has already been projected for you uh, to at least see what type of moats are there, reflect back. And maybe in a minute or two, I'm going to request Kanchi to actually launch a poll which has most of these categories covered. And I just want to get a sense of it, that how many of you participants are fall in which category, and do at least tick one. If you want to tick more than one, doesn't matter. It is only a representative poll, because I'll just kind of get a sense of it, that one is that you are thinking of a moat, and then what type of a moat you are thinking. So you should see on your screens a poll which has, I think, 8 or 9 options. And take a couple of minutes, just put a tick mark on it, and then once we close the poll in next 4 or 5 minutes, then Kanchi can put the results, so we get some idea of it. Kanchi, can't we see those soft modes? Is there a?
It's there. They just need to scroll down.
So they need to scroll down. Okay. So guys, there are you need to scroll down also, because there are soft modes too. I think there is a limitation on the screen. So just scroll down, so you will see most of them, and then you can select the ones which are applicable to you. Yes, Kanchi, shall we close it?
Sure, I'll just.
Okay, so we have technology. Okay, technology platform is 52%. So, but it seems that there are quite a few of you who have already created that barrier using platform, which, by the way, generally takes time. And 39% intellectual property. That's a good number. Then we have. Kanchi, can participants see the results also, or is only I can see it?
It's shared with everyone.
Oh, wonderful. So market network effect, 39%. I would have expected that. Global markets, that's very interesting. So it means most of the participants here are looking at global markets. And I love the last one, soft modes, brand, culture, regulatory. So I don't think there may be too many regulatory ones, but brand and culture, as long as you continue thinking about it, you cannot go wrong. So I'm very encouraged with this, and I'm not surprised that sunk cost is so low, because you're not into those kind of products which create sunk cost. But I'm very glad, and I would have expected technology to be the highest. So excellent, excellent. Okay. So, Kanchi, on this point, when we have talked about various modes, what else can we talk about? Can you kind of ask a question, or what else you want me to cover?
Absolutely. I think, so first of all, it's wonderful. Thank you so much for this. So the founders, for sure, now that you know when you're starting out or in your early stages, once you've identified, okay, these are the areas that we want to go ahead and build a moat. What are the steps, and what are the, what do you suggest? How do they go about and create and build these moats out for their business?
Okay. Yeah, excellent question. And folks, do ask any of your questions on Q&A box, because we want to take your questions. So Kanchi asked that, how do you create moats for your early stage venture? And I think that's a very important question to answer. And my experience, getting a high performing team is extremely important. And since a lot of you want to create a technical moat, okay, based on technology, I'll say that your team has to have very deep technical skills. So, and I come from a very deep technology play with IBM for 14 years, and I was actually part of IBM research. So we always used to look at new technology, new landscapes. AI ML is a very, I'll say loosely used word these days. Even if people are doing analytics, okay, they call it AI ML. Trust me, AI ML is very, very different from doing analytics. Okay, and but these days, whenever I see any startup pitch, investor pitch, AI/ML word is there. You ask them two questions. Okay, how did you train your models? Okay, oh, I had data of 10,000 people. With 10,000 people, you can't create a good machine learning model. As simple as that. Okay, so don't call yourself an AI/ML company if you don't have access to real data which you can leverage. Okay, same thing related to whether it is blockchain or it is IoT or it is AR, MR, VR. Okay, any of those deep technologies, you need to have deep technical skills. Don't embark into doing something. And I always tell startups, if you truly think you have deep technology, at least go and try to file a patent, or at least, even if you don't want to file a patent for whatever reasons, okay, at least go do patent search. At least find out if there are things out there. Because one thing I have seen, by the way, I come from technology background. I'm IIT Kanpur, okay, long time back. Problem with technical guys is that they think whatever they have built, okay, nobody else can build it. And I want to warn all technology-led founders, okay, or founders who are technology-oriented, okay. Trust me, you have to go and validate whether your technology really is unique and differentiating, because don't assume it is. Okay, and one thing I have learned the hard way, that you need to be very, very kind of have a lot of empathy with the customer, because it is the customer which has to see whether what you have is unique or not unique. A lot of times, technology folks just create products thinking that it is of use to customer, and it is not used to customer, or customer is not willing to pay. And there I'm always reminded of, and I don't know how many of you have read. If you have not read, go read a book called Lean Startup by Eric Rice. Okay, there's a lean startup methodology which is very, very well proven, and that basically talks about is that you create a hypothesis of whatever you want to build. Okay, obviously your team is going to build it, but you need to validate that hypothesis as early as you can in your kind of building the company. And there is a kind of a virtuous cycle which lean startup talks about, which basically says you have a hypothesis. Based on hypothesis, you will build your product or service, or you will design your user interface, or you will design your stack, whatever you want to build or design. As soon as you think you have done it, go, okay, try it with your customers. Even if it is an idea, go validate with your customers. But when you are validating with your customers, have a matrix to measure it. I know last, in one of the sessions, Alok Mittal talked about business model and matrix. So if you can't measure something, okay, it is not worth taking it out. So if with a customer, you go and say, do you like this? If he says, yeah, I like it, then that's a good measure of yes. But can you ask another question, that how much you will pay for it? Okay. So your questions to your customers to measure the impact of your product or service which you are building or designing has to be very clearly articulated. And once you have measured the feedback, you need to learn from it. Because if you don't, again, go back to the drawing room, learn, and from that learning, you again improve your build and design. So that is where it is a virtuous cycle. So look at it, 3 boxes with arrows going among 3 boxes, and you go around and iterate on it till you come with something which you believe is worth it. And one thing I'll tell you, it's not only for startups, early stage or whatever. Even big companies like IBM, Google, okay, or any of them, they follow similar methodologies. Because if they don't follow that, it is very obvious. You may build a product which you think is the best. You take it to the customer. Customer says, I just don't need it. Because what I'm doing, I'm happy with it. What do? You have got all the sunk cost, and you have basically not built a company. You have just burnt away your money. And one thing is, while you are doing all this, never lose sight of competitive landscape. And again, I come back to, Technology guys think whatever I've built, nobody else can build. But it maybe nobody else can build. But if customer problem can be solved with another product or service which competition offers, which is cheaper, and the customer is willing to pay less, then why will they buy your product? And I've seen, by the way, a lot of startups. Their product may be good for Indian market because Indian market is a very, very price sensitive market. But the same product may not work in global markets. And it is vice versa too. Uber or let's say, Starbucks can sell a coffee, or Uber can have a ride where average price to the consumer may be much, much higher. That's why you have this economist have Big Mac index. So your pricing model has to be different. And that, how do you fine tune that pricing model? By looking at competitive landscape. And the biggest thing there is you need to get into the shoes of the customer in the markets you are addressing. And that is where I believe empathy with the customer is extremely important. And I've seen so many stories where founders think they know what customer needs. But when they go to the customer and actually sit down with them, they get surprised. They are shocked that their hypothesis was wrong. So it is better to learn from your mistakes early than understand it late. And one thing is there, that if you engage with customers early enough, they will themselves help you to define your moat. Okay, because they will say that, okay, if you offer me these features, and once I have these, then I know that, okay, I'm going to be with you for longer term. And obviously you start with a target market, you then build for that market, then you service that market, and over time you continue creating it. And one thing, always be sure, okay, you may have the greatest idea, you may have the greatest product, competition will catch up. Just the way you will also catch up with competition. So you need to continue innovating, continue, further strengthening your moat. So you cannot just rest on your laurels. And so that is basically how you create moats at an early stage of your venture. And then I think the natural next one comes is that how do you maintain this advantage over longer period? And this I can give you a lot of examples of IBM or Google or even Infosys. HCL, by the way, is following a new model now. They are investing lot into intellectual property. So that's a new moat they are trying to create. Infosys, TCS, Wipro, they created a moat by hiring a lot of smart computer scientists and developers. So, but the model is still the same. You need to build, design, measure, learn, but it is just at a very, very different scale. So you take any example today, and by the way, COVID times has made us a lot more conscious of innovating all the time. And depending on which moat you believe in, you have to continue building on that moat itself. And again, I've given some examples related to Paytm, related to Flipkart, related to Amazon, and now whether it is brand, whether it is culture, you just need to continue following that cycle. And even I can, but let me see if I can think of even some companies, Series E, they would be even trying to maintain their competitive advantage. When they are saying they are maintaining their competitive advantage, they are maintaining it through moats, nothing else. So obviously you have to create moat at an early stage, but continue building on it and continue innovating. So that's basically what I have as a kind of initial thoughts. What I thought I will share with you, and we are at 4:40, so we are 40 minutes into our session. So I think we will get on to Q&A, and feel free to ask any specific question. If you have a very specific question related to your company, then you may have to give me 1 or 2 lines of what you are trying to do, and I'll be happy to help you think through your moat and competitive advantage. Over to you, Kanchi. Do we have any questions on Q&A?
Yes, we do. First of all, thank you, Mr. Anupam. So there's a mix of questions. We do have some from the registration form that was sent out, and then there are some that have started coming in right now. So I'll just pick up.
Yeah, so I'll go with you whichever way you want to run this.
Sure, sure. So the first question is actually based on, when we were discussing the different types of moats. So the founder would love to know more about some case studies in terms of how founders have gone ahead and protected their IP or ideas from the very beginning and prevented trouble in the later phases of their business as they grow.
So in the early phases, I'll tell you, there are 2, 3 ways I have seen. One is patent. But again, I have seen a lot of startups not thinking of patents till they have somebody in their founders team who has filed patents in their own professional life. Okay, and but otherwise, I do see hesitancy. Either they don't see the value of it, or they don't want to go through the IP law and legal because founders are, get a product, let me get it out in the marketplace. But then you still can have a technology-based mode by having some algorithm, some unique data which you are accessing, and something which cannot be easily replicated. And that's how I think some of the technology guys have created a moat. Uh, uh, I think that's what at least I can think of right away. Next.
All right. So how can I build moats in the edtech space? So for example, you have online language courses, online tutoring for K-12 and for grown-ups. So the founder is asking, how can I compete with those MNCs which offer free content or free offerings?
That's always a tough one when you are a late entrant. So one I will say is that if you can come up with the content which is more local, so that at least then hopefully MNC threat will be less. And I believe now, especially edtech was very hot earlier also, but with the COVID times, edtech has just gone through the roof. And so I've been seeing some interesting business models where they are targeting, those niche areas which have not been addressed by Byju's of the world or Vedantu of the world, where they are trying to, let's say, align with well-known universities, where they can use the brand name of the university, use those professors, and then offer online courses, because then it brings them that brand kind of recognition upfront. Or you offer content in local languages because there is not that much of content in local languages. Or you can, I've seen some proposals where they are going gamification for a particular market segment for them to kind of engage with the learners. Okay, and so there are various ways to do that, and this is where any market or landscape is very crowded. Okay, edtech is getting crowded in the last 1 year. Okay, fintech has been crowded for years together. So wherever there is more crowd, you may have to spend more time, okay, looking at what is out there before you really define your product or service, and then identify your market segment, which is more focused, but it is still large enough to build a company on top of it. Okay, because I'll say the contradiction is, if you go a very focused market segment, then market size gets limited. But if you go for a very broad market, then you will have bigger competition. So you need to iterate on that, and those are some ideas for edtech. And obviously, I can talk on that forever, but I want to take more questions, and so that we cover as much ground as possible.
Thank you,
This
Mr.
one,
Anupam.
Kanchi.
Yes, I just want to remind the founders that we have the Q&A tab at the bottom of your screen. Please feel free to drop in your questions there, and that's where we'll be taking them from. So you need not put it in the chat box, the Q&A tab, and we'll pick it up from there. Thanks. So our next question is from a founder who's asking, do you think Reliance Industries is creating the same monopoly like Google in India?
I'm not a strategy consultant to Reliance, so I frankly cannot comment on it. But whatever I have read as a citizen, I won't say that I will compare them with Google as such, okay? Because Reliance is picking their own They may be a monopoly like Google is in search, but will they be monopoly in search like Google? No. I think they will be a monopoly to offer various data-led services on top of their Geo mobile services platform. And they have publicly announced it, so I don't think there's any. And I think what they are trying to do is organize the whole Kirana sector, which is so fragmented. And Kirana stores don't know how to digitize. All of them know how to use WhatsApp. Okay, but how do they put their inventory on WhatsApp? How do they get their payment thing going? Because they are not digitally enabled. I think that is where I think Reliance may build a monopoly of retail through Kirana stores, both offline and online. Because you cannot do away with offline stores. My wife still loves to go to an offline store, okay? But for emergency purchases, she goes online. But some of the things she will never buy online. So to me, I think that's where Reliance may have their monopoly. But don't underestimate Amazons and Walmarts. I think they are looking at competitive landscape. I'm sure they know where Reliance is heading, and Reliance is going to have competition. So it's going to be interesting to watch that space. Next one.
Okay, thanks. So how do you get feedback from prospective customers on a product before developing and launching it? You touched upon it briefly, but...
Excellent question. So, I don't know, but maybe you can go to Google and do what is called a mom's test. I don't know if you have heard of it. Basically, it is if you have an idea, go talk to your mom. Say, Mom, will you buy this if I make this? Okay? Because she will give you the most honest answer, because moms love their children, kids. You go and ask any other customer, okay, there is a high risk that they may sugarcoat their answer, but a mom will never sugarcoat her answer. And typically, because mom being a different generation, and if you have a digital product or a technology-based product, she may not be as savvy with it, even though again, during COVID times, I think my generation, and by the way, an elder generation, most of them have become more tech savvy. But if you can ask them whether they will use it or not, and not only use it, whether they will pay for that use. Because if they are not paying you, then there is no point building that product. And you have to continue going and talking to customers. Don't be scared of customers, okay? Because if you're scared of customers to test your product, how the hell are you going to go and sell it to them? I think that's the key to it, to test your idea or product. Next one, Kanchi.
Right. Mr. Anupam, now we're seeing founders sharing their business ideas and would like to know what would the moat be in their respective businesses. So maybe if we can touch upon 2 or 3 of those, then that would give them a better idea on how do they identify which moat is for their business. So one question is from a founder who's saying, we are in a niche recruitment space. Recruitment as an area have many big players. So what do they need to do to create a moat?
Interesting. So I can give you one example, okay? So one company, what they tried to do was, again, I don't know how much competition is out there, but they basically came up with a technology where a candidate can give an interview on video, and they do video recognition or video analytics to map or extract some attributes which that employer is looking for. And then they give a scorecard based on analyzing that video clip. So to me, that's a classical technology moat, because you have one is from an HR viewpoint, you have identified which attributes are important for a particular type of an employer. How do you extract those attributes and score them based on video analytics? And I believe that, I don't know whether they have done it or not, but based on my knowledge of state-of-the-art technology, they may be able to come up with some patents. Okay, and even if they file 1 or 2 patents, that itself creates a moat. And imagine from a business value viewpoint, you have taken away the drudgery of the employer to go through resumes, okay, read them, then still have an interview. Okay, so here you are basically not doing anything based on your labor effort. You're basically, okay, putting videos through a system and coming up with the attributes, and then you can do analytics on those attributes. So there are various ways to create a moat for a recruitment company. And scale obviously is there if you have okay, enough customers. So and again, it's very difficult to continue in this such a short session to give you more examples, but I'm giving you based on some proposals I have seen or some interesting startups I have seen. And again, that is why I say an excellent team who will brainstorm together is the best way to create a moat. So that to me is the paramount. And if founders are motivated, they have the right mindset, they can come up with a moat.
So,
and talk to as many experienced people, talk to as many mentors, talk to as many advisors, okay, and continue validating your idea, because don't sit in a room and say this is the best idea and I'm going to implement it. Okay, next one, Kanchi.
Another case study we could take so they are the founders have developed a mobile app operated automatic dispensing machine to serve pani puri. It costs about 25,000 rupees, so they're saying that it's the lowest in the market. So what should be their strongest moat?
Pani puri carts. Okay. No, one could be a brand itself, right? So, and so again, I don't know what the competitive landscape is. If you're lowest in the market and you can create a brand name of Pani Puri carts, I think that sounds like a good one. It denotes the product, it denotes other things, and all you need then is again which market segment you are going after, and what your go-to-market strategy is, and just build on it, because at least you have two of the three, four things which are important. One is a good brand name, and you have a cost advantage. Only thing here is that if you can also come up with a good financing model to create a moat, because I don't know how many, who's your customer who is going to pay for this automatic dispensing machine. Now, if you expect them to upfront pay 25,000 rupees, and the return on their initial investment is going to be, God knows, 2 years, 3 years, then will they put that 25,000 rupees to get their return on investment in 3 years? Versus you come up with a financing model for them so they get their return on investment maybe in 3 months or 6 months. So that could be another moat you could create of how do you finance upfront cost of your dispensing machine. So there are multiple ways to do that. And the biggest one is how do you basically have your go-to-market.
Thank you. Now, an area which you're an expert in, I heard software alone is not patentable in India. Is software with proprietary algorithms patentable in India?
No. Problem with Indian patent law is that it does not recognize that. So what you can try to do is, if it is a possibility, you can patent a process. So see if you can define a process from a customer viewpoint or end-to-end viewpoint, and try to do a process patent. But frankly speaking, if it is a very unique algorithm patent, I strongly suggest people, because by the way, even if you patent in India, because of the way the legal system is, yeah, you may have a good investor value, but you may not be really able to defend it if somebody kind of, what is the right word against patent? Infringes on that patent, okay? So if it is such a great thing, I know it is expensive, go file a patent in USPTO or go PTC route, and then you have 1 more year to decide whether you want to patent in US, even if you're not going after US market, because then patent itself has value, okay? And that will also further validate that what you are thinking is a good algorithm patent or a software patent, whether it is really a good one or not a good one. Or maybe you can just get it vetted out through a US patent attorney and validate what your hypothesis is. But process patents can be done.
So continuing on the same theme of patents, the next question is, how can a startup defend a patent? I've seen this from many founders where they're saying we're busy building the business, so who has time for legal wrangling and the
Yeah,
resources as well from the
very tough one to answer because these battles can go for a long period of time. And even by the way, it's not for startups. Even IBM goes and litigates against infringement of patents. And I know US courts take it very seriously. So millions of dollars they get paid as compensation to the inventors. But in India, my only thing will be, if you're a startup and you're short of time, short of resources, don't get into, let's say, patent fights unless and until you want to go file a suit against Google or IBM, because they will be scared. Okay, and they may wear you out in the court of law. But if they really think your case is strong, they don't want to carry too many lawsuits against them, because then they are answerable to their shareholders. But if it is another startup doing it, okay, maybe a legal notice is good enough, or if you can get a lawyer who is cheap, because you want to keep them at bay and not kill your competitive advantage. Okay, but getting into litigation and wasting founders' time, which is very precious, I frankly will not suggest that because it is just too expensive. And another one I always think, it is too much of negative energy when we are when we are filing lawsuits. You want always to have positive energy. So look at from all those perspectives, because it is easy to start a lawsuit. It is very difficult to end it. So be very careful when you start following that path if you are short of resources.
Okay. Another one on patents. Is Facebook's platform IP-able? So ignoring Facebook's existing customer base, can we make a Facebook 2.0 in India? How would such a platform be patentable?
I frankly don't know the answer to whether platforms are patentable. Okay, and my other thing will be, why do you want to make Facebook 2.0? Okay, make something which either uses Facebook or has something else, because I don't know. Okay, Facebook has a long history of 10 years. Now, are you going to wait for 10 years to create Facebook 2.0? But I'm assuming it will be the same features. Okay, but maybe pick a smaller segment. Okay, where you attract the right, I'll say, users or consumers. So you can take Facebook's ideas, but have a more focused market segment, because a lot of people don't like Facebook because it is just too huge. They don't know whom they are talking to, what's happening. Okay, but I've seen models where there are more focused market segments for and giving similar kind of features. So I don't know what you exactly mean by Facebook 2.0. I will rather say that take some ideas from Facebook, but call it something else book 1.0. Okay, you may have a much better chance than start on a concept of Facebook 2.0. Facebook has gone too far. I think there's no point trying to build something that already is out there.
Our next question is it fine to work with the giants in the technology industry, so large enterprises, where the fear is that they might take the startup's idea and become a competitor? So,
by the way, that question I come across a lot of times, okay? And again, in my experience, don't be scared of talking about your idea. Don't talk about your algorithm, don't talk about your secret sauce. But ideas are dime a dozen. It is the execution of that idea which is really, really difficult. Okay. Even a lot of ideas, Google has that expertise that they can do it, but they may never end up doing it because their priorities are so different. Okay. So there is always this David and Goliath story, right? Okay. So just because there is a Goliath out there doesn't mean there are no Davids out there. So don't be scared of okay, a large company may do it. Yes, you need to be aware of what their capability is, what their strategy is, what they are maybe announcing, because it should not happen by the time you enter the market. Okay, they already have on their roadmap or they have announced it somewhere, and you get killed on day one. But execution, not everybody can do. Okay, so people can steal your idea, but they can't steal your team. They can't steal your brains. They can't steal your expertise. Okay, that's why a team is extremely important. So don't be worried about it. Next, Kanchi.
The next question is how to define my moat when my competitors are the ones who can help me out? So for example, let's say I am creating a startup investment platform. How would I create my moat when I want to research the investors community through my competitors' platform?
So I need to understand it a little bit more. Can you, because if I understand correctly, you want to build an investor platform where you want to talk to investors who are using a competing platform. That's what it is?
So Rishabh, I believe this is your question. If you'd like to elaborate, please feel free to send it in the Q&A tab, and we'll pick this up again after the next question.
Okay, so I can read Rishabh's question. Let's say I'm creating a startup investment platform. How would I create my moat when I want to reach the investor community through my competitors' platform? No, so if I understand your question correctly, Rishabh, is okay, if those investor communities already on your competitor platform, which is good, because then you know who those investor community is. And if you can offer something unique, which is differentiating from your competitor's platform, why won't those investors community be more interested in using your platform? So that to me is excellent because you already have a customer base out there. So you don't have to go and look for other customers. You just poach existing customers. What did Reliance do? They offered Reliance Jio, and they said, I'm going to offer it at half the price of Bharti or Airtel or half the price of Vodafone. And customers flocked to them. Data prices crashed. So if I understand your question correctly, you are in a very good position as long as you have a moat which differentiates you from your competitor's platform. I hope I answered your question. Next one, Kanchi.
Yes, Mr. Anupam. Actually, so for example, when we're talking to a lot of founders, you speak to a lot of founders. And, when they present their ideas saying, this is my moat, what are the common mistakes that you must have seen that founders think that, okay, this is a moat, but you don't really feel it's a sustainable moat that will take them in the long run? So what are the common mistakes you think founders make with identifying?
Good question. So I think the biggest mistake I have seen is they don't understand what competition is out there or how their potential consumers are solving customer problem, okay, today, because they have not talked to customers. They think they have a moat, but and what happens is, especially Indian Angel Network, I'm not here trying to promote Indian Angel Network, but there are like 450 members. At least 40, 50 of us are always there in the pitch session. So somebody or another would have seen something in that same space. And when a founder makes a claim that, oh, this is my moat, they say, have you looked at that? And if the founder is floundering, there is a serious problem. Okay. And I'll give you an example while I was talking. That a lot of times they say, oh, I have got a very sophisticated AI ML engine. Okay. And a lot of times it has happened. I've asked two questions and there is no AI ML behind it. Okay. There's no data science behind it. So, so that's the mistake they make. And so you need to be very clear when you make a claim that this is a moat which I have created, that it is really there. And then the natural question is, how do you plan to maintain it? Next one, Kanchi.
Thank you, Mr. Anupam. So again, a couple have come in terms of case studies for their business and they would like to identify the moat. So there's a founder is asking, what could be an example of a moat for a digital health and well-being startup?
Digital wealth and health is such a broad topic, right? So, and look at all these practos and, okay, there are so many of them out there. Now even hospitals are getting into that because of COVID. So again, I will say that look at maybe something related to either teleconference. Okay, biggest mode which I have been interested in health tech is I'll say again, AIML is a very badly used word, or computer vision. Okay, to look at X-rays, to look at CT scans, and apply techniques of computer vision to help diagnose what the problem is. Because the challenge is there are not that many doctors who can easily identify what the kind of radiological symptoms are, and if computer vision technologies are now fairly accurate, So if you can use computer vision technology to diagnose, okay, or there is real-time data which a lot of these devices throw up, whether it is ECG monitors or it is Apple Watch or Fitbit or whatever, okay, if you can look at how to analyze that data in real time and make sense out of it, okay, that could be another mode you could create. And so there are lots of examples of those, uh, but when it is a broad health tech, too difficult to pinpoint one. And so I don't know what more to add. Next one, Kanchi.
If a competitor has already patented similar technology in the US, camera plus proprietary software related concept, should we avoid working in that domain even if our process of achieving a similar thing is totally different and in fact more efficient?
Yeah, there is no harm in that. And there was always patent licensing norms. So if you can approach that company and say that we want to use your technology and do some kind of a technology transfer arrangement or a revenue sharing arrangement. So basically, then it legalizes your use of patent and you are building on top of that patent another offering or a product. And you know, it is a classical case of, again, inside Intel. Oh, sorry, what is it? Intel Inside, right? So all these guys used Intel processor and they gave credit to Intel. Intel sold chips, and other companies sold their workstations, laptop, computers. So your case can be a patent inside, and there is no harm in doing it. Next.
The next question is, okay, there's more.
I see one. How different is creating a moat and risk taking? Now, to me, you know, they are different because risk taking is you're taking a risk as an entrepreneur, and you can take a risk without creating a moat. Okay, chances of your success on a sustainable basis may be less. Okay, but risk taking is risk taking, right? You put money, you go to a casino, put money on a roulette table or a blackjack. That's risk taking, but that's not creating a moat. Okay, what else?
I think we can take this last question on how to create a moat for a technology-based mentoring service platform, which matches industry experts with mentees from diversified background. So I guess most of their questions are aligned. You know, if they have a business, how do they pick from the list that was shared? You know, on what are the different types of moats? So, you know, which bucket do they fall under, and then how do they go ahead?
So again, I will always be biased in favor of technology. So if you have a technology-oriented offering, then see what technology component will help you create a moat. I'm saying component. I'm not saying patent. I'm not saying trademark. I'm not saying algorithm. Okay. I'm not saying process. I'm not saying technology stack. I'm not saying front end or back end. I'm saying which technology component makes your offering unique, which will depend on your technical team. And by the way, technical guys are always great in saying, oh, nobody has done this before. Okay. So throw a challenge at them and create that kind of a moat. Okay. Now, if it is non-technology, then other ones, you know, whether it is cost or whether it is scale or whether it is brand or whether it is regulatory is a very different bucket. Okay. Those do take time. So my thing will be if you're a startup, then one moat can be pick a good market segment, which is unserviced by your competitor. And if you can satisfy them, then that itself may become a moat. So, but there are no simple answers to which moat will is possible to create for your kind of a business because it is again a lot depends on the customer and competitive landscape. So remember my words, you know, world was running before you came up with a better solution or somebody came with a better mousetrap. Okay. But how do you create value for your consumer or customer who is willing to pay for that new mousetrap or new solution is what will help you create a moat. I think mousetrap is a good closure to the whole thing, right? So if there are no burning questions, I think it's already 5:12. Kanchi, do you think we should wrap it up or? You
Okay,
want to take
thank
some
you,
more?
Mr. Anupam. We can wrap it up. I know there are a few other questions on topics that we would be covering in future sessions of the series. So I request the founders to join in when those topics come up and gain insights and ask the members the questions then. A big thank you, Mr. Anupam, for such a comprehensive and wonderful session. I'm sure our participants have got some great insights, which they can then go ahead and implement. I'm sure talking to customers, being empathetic to them, learning from the insights they get from their customers and going ahead and implementing it in their business is going to be key. Truly appreciate it. Thank you so very much.
Yeah, thank you, Kanchi, for giving this opportunity, and thanks to all participants. I see the numbers have been increasing, and there were not too many dropouts. So I think that gives me a lot of satisfaction that it was an engaging session, and I'm delighted to see. I think the depth of questions, and we had, I think, over 25 questions. So thank you very much for all of you for spending more than an hour with us, and I hope you will continue attending future sessions of this series, which IAN has organized, and Kanchi has been doing a great job. Thanks, Kanchi, and thanks everybody for your time.
Thank you so much, Mr. Anupam. For our participants on the call, if you're looking to raise capital or looking to connect with the speaker or have any questions, just please feel free to write to me. My email ID is kanchi@indianangelnetwork.com. I'm leaving it in the chat box so you can take it from there. And our next session is next Friday, as usual. This is a series that's hosted every Friday at 4. So the next session is on building and scaling your startup with technology. We have two speakers, Rajneesh Kapoor, who's the managing partner of IAN Fund, and Avlesh Singh, the co-founder and CEO of WebEngage. So you will get an investor and entrepreneur's perspective via that session. And I will be again posting the registration link for that session in our chat box. You click this link and register for the session, or in case you want to register at a later date, we will be sharing this link on our social media channels as well, whether it's Facebook, LinkedIn, or Twitter. So please feel free to log in there and sign up. And thank you so much for attending the session today. We look forward to hosting you next Friday, and have a wonderful weekend.
Thank you, folks. Have a good weekend. Bye.